Hi everyone! Welcome back to the channel. If you're new here, I'm PPE and this is the Peso Pro episodes where we'll talk about personal finance and money management tips and tricks. If you're looking for peso hacks, you've come to the right place. In the previous episode, we said we're gonna talk about the 8 pro steps towards financial independence. These are 8 steps that I've combined from all of the books and even all of the vlogs and blogs that I've watched and read to be able to come up with a guided set of steps to reach financial independence. I personally have not reached my own financial independence, but I'm here to share with you everything that I've learned along the way and what are the successes that I had and also the mistakes I made along the way. If you haven't already, please click on subscribe to this channel so that you will be notified for any new videos that we will upload in the coming weeks. Some of those will focus on specific steps that we will discuss in today's video. In this episode, we're gonna cover the 8 sequential steps to help you answer those questions of saan nga ba talaga ako magsisimula or ano ba talaga yung dapat kong unahin? Is it to invest, to save, bibili ba ng bahay, or magbayad ba ng ibang utang? All of these we're gonna discuss in the 8 steps, and without further ado, let's proceed to step number 1. Step number 1 is all about knowing your fundamentals. It's all about budgeting and saving. In this step, we're gonna talk about how do you create a budget and understand your own spending patterns in order for you to be able to create a savings habit for yourself. In this step, kailangan nating maintindihan kung ano ba yung pera na nauuwi natin, which is basically our net take-home pay, after lahat ng mga deductions na ginagawa ng employer natin, or if you are self-employed, all of the expenses that you incur. After understanding your net take-home pay, the most important things would be to understand how are you using or how are you spending your budget or your money in any given month. My personal advice is to write down all of these for the 3 to 6 months window for you to consciously think about saan ko nga ba ginagamit yung pera ko. This can be your most basic expenses like housing, food, transportation, but also don't forget to include all of those small, seemingly simple items like milk tea or other purchases that you do in Lazada every time there's a sale. Put all of those together in a spreadsheet so that you understand what are the spending habits and behaviors that you're most prone to do. Once you understand all of this, you will be much better in understanding your current state, and from there, you can proceed in making some adjustments so that you can maximize the value of every peso that you take home. Remember, in personal finance, the one formula that will trump any other formula in your journey is always income minus savings equals expense. If you do not live by this formula, you'll probably end up by doing expenses first and making savings almost close to zero. If anything, maybe sometimes you end up with a deficit. In step 1, we're gonna add more videos for you to be able to come up with your own budget, come up with your own spending tracker, and come up with some very simple measures so that you can understand if you're on the right track or if you need some tweaking so that you can manage your finances better for the next steps. Step number 2 is all about creating an emergency fund. You probably heard about the emergency fund in different blogs, but when I asked my friends, they were actually not very familiar with the concept of emergency fund. So we're gonna talk about it in more detail in future videos. But today, we're gonna discuss the concept of emergency funds because they actually show up in 2 steps in the 8 steps. In step number 2, we're talking about an initial or a starter emergency fund. Ano ba yung meaning nun? An emergency fund is a set of money that you set aside in a savings account that is very accessible and can be withdrawn at any given point in time, especially when there is an emergency, as the name suggests. This emergency fund is a pool of money that you set aside for anything that you do not foresee. So, as a rule of thumb, we're gonna create an initial starter fund in step number 2, which is 50,000 pesos or 2 months worth of your net take-home pay. What you will do is you will use your number in step number 1 for your net take-home pay, multiply that by 2, and compare that to 50,000. Whichever is the lower number is the initial starter emergency fund that we will target to complete in step number 2. To illustrate, if your net take-home pay in a given month is 15,000 pesos, multiply that by 2, you get 30,000. 30,000 is lower than 50,000, so aim for 30,000 pesos in your initial starter emergency fund. If your net take-home pay is higher than 25,000 pesos, let's say 30,000, multiplied by 2, that becomes 60,000. So go for an initial 50,000 emergency fund so that you are set up for success. Bakit ba importante na may emergency fund before we go into all of the investing, purchase of insurance, and all of this? An emergency fund actually gives you some level of security, especially for the unforeseen circumstances in life. Hindi na tayo lalayo. In 2020, there's a lot of unforeseen items that we've seen across the year. Be it a typhoon or a pandemic, leading to a lot of Filipinos actually losing their jobs. We don't know what we don't know. Having that emergency fund, even if it's a starter only, for 2 months worth of your net take-home pay, will give you the sense of security and financial peace of mind so that you can focus more on your family and also focus on the next steps that will guide you towards your financial independence journey. We're gonna come back to emergency funds in the next few steps, but for step number 3, I want you to shift gears and understand, after you've done the starter emergency fund, stop building bigger savings for now. Yes, some of us will think that just saving and saving actually will get us to wealth, which isn't always the case. If you've heard about friends who have saved a lot of money, what they will also tell you is that savings, in most cases, is also not enough all of the time. So, in step number 3, we're gonna discuss about paying off high-interest debt. High-interest debt is any debt that charges you an enormous amount of interest. What you don't notice sometimes is when you borrow money, you borrow, for example, 10,000 pesos. The 10,000 pesos is the number that sticks in your mind. However, if you add interest on top of it, this can easily be, depending on where you get the loan, can easily be about 10 to sometimes even 60% more expensive at the end of the term. For example, if you get credit card loans, and if you don't pay that on time, you're gonna be charged by about a 2% finance charge at the end of every month, which becomes a 24% interest at the end of the year. That same 10,000 that you did not pay from your credit card becomes easily 12,400 at the end of 1 year, making you pay more for the amount of money that you actually used. So in this step, we're gonna discuss paying off the highest interest debts so that you don't have a lot of anchors weighing you down in your financial journey next steps. In this step number 3, ang pinaka-importante is that if we know lahat ng mga utang natin, ilista nyo lahat, including the outstanding amounts, the interest rates, and yung minimum amount due, in a piece of paper, we will be able to tackle all of these debts so that we can understand how to go about them. I have heard so many stories from our fellow colleagues at work or even friends outside of work that sometimes managing debt can be very, very stressful and also overwhelming, that sometimes we don't even just think about them anymore. Hinahayaan na lang natin. The worst part about debts is they have the same power over you from a math standpoint, which means you pay more from interest because nagbaballoon siya, but they also have the same power over you in terms of emotional distress. If you continue to have these debts for a long period of time, you lose focus and you end up paying a lot more in interest, making it a cyclical problem that you never get out of. Step number 3, our focus is not to save more if we have all of these high interest debts first. What we will do is we will focus on paying them off. Step number 4 is now again about emergency funds. But now, we've discussed emergency funds in step number 2. Step number 4 is creating the full emergency fund. Finance experts tell us that the best emergency funds will be somewhere between 6 to 12 months of your monthly expenses. To simplify, our target for step number 4 is for you to be able to save 6 months worth of your net take-home pay. What does this mean? In step number 1, if nag-compute kayo ng 15,000 net take-home pay, you just multiply that by 6, that's 90,000. If you did step number 2 correctly, you already have 30,000 in the bank. Meaning, may kulang tayo na 60,000 na para buuhin yung buong emergency fund natin in step number 4. The goal in step number 4 is for you to have more cushion, because in times like these that we are in today, sometimes 2 months worth of emergency fund is actually not enough. A lot of you who probably had experiences with hospital bills or unemployment can attest that having 2 months worth of your net take-home pay is not enough in most circumstances. I.e., in our example, 30,000 won't be enough to pay for hospital bills if somebody in your family suddenly gets hospitalized for whatever reason. Or if you lose your job, 2 months may not be enough time for you to find a new job to replace the income that you lost. So in step number 4, ang gusto natin gawin is makabuo ng 6 months worth of emergency fund. Same concept, this 6 months worth of money gets placed in a high-yield savings account na pwedeng i-withdraw at madaling kunin in case of emergencies. Step number 5 is now talking about investments. So, in step number 5, our objective is for you to be able to save 15 to 20% into retirement. Yes, 15 to 20% can be very difficult if you think about it. But as you progress through the steps 1 to 4, what you'll notice is that as we prioritize different facets of our personal finance journey, what you will also understand is you're also now done in saving for your emergency fund, and by now, as you reach step number 5, you're also done paying all of your debts. Ideally, by this time, the only debt remaining will be your mortgage or your housing loan, because we consider that as a low-interest debt. What you will do is to come up with a strategy na yung lahat ng pera na ginamit natin to build the emergency fund or to pay for the debt becomes an investment fund that we will set aside for our retirement purposes. As a rule of thumb, investing 15 to 20% of our income is a good starting point for us to be able to prepare for eventual retirement. As you all know, pension from the SSS or even sometimes your corporate pension will not be enough to cover your expenses during retirement. So starting early is going to be very important so that you have enough time to prepare and also enough time for compounding interest to make its magic work. For more information on compounding interest, we'll tackle that in a new video in a few weeks. After you've set your investment strategy of 15 to 20% per month, we can proceed to step number 6. Step number 6 is about saving for necessary milestones. These could be saving up for a wedding, saving up for your kids' college tuition, for example. Whatever that may be, these are costs that will be very significant over the rest of your life. So having enough time and having enough plans and strategy to get to the amount will be very crucial. In this step, we follow the same logic of investments, but we will discuss more specific investment choices for you to reach that goal in the most balanced way as possible. In this step, you will begin to understand the power of compounding interest and investments on top of the savings habits that you were able to develop in the first few steps. Step number 7 is now to fully and finally close off all your debts. As of this stage, the only remaining debt should be your housing loan. The housing loan sometimes is called a good kind of debt. I wouldn't say any debt is good, but at least for housing loans, you're actually building value in the equity of your house. So say for example, you took out a housing loan to buy a condo unit In most cases, you're gonna pay for a lot in terms of interest, but we also understand that building millions of pesos to buy a property out in outright cash is very difficult. The good part is when you buy real property, the chances are that the value of this property also grows along with time. So at least you're balancing off the impact of the debt towards the equity of the real estate. Whatever it is. It can be a condo, it can be a house and lot. As of step number 7, our goal is to find the best strategy to be able to finish the housing loan once and for all. For me, a lot of Filipinos struggle with this, with 30-year pag-ibig housing loan. Sometimes that feels like you're gonna be paying well into your retirement years. So what you will do is taking everything we've learned from step 1 to step 6 and also understanding that as you go through these goals, you're also creating more value because 1, you finish all of your high interest debt, meaning hindi na kayo nagbabayad ng mataas na interest on those debts. You have your emergency fund in place and intact, meaning it will give you some security that even if you're faced with some, say, problems or issues at home, or whether it's also a natural calamity, you have this safety net or cushion money to protect you from going back into debt, which is the last thing that we want to happen. In step number 7, I'm excited because I found a couple of ways to actually maximize how we're paying for mortgages or housing loans. I'm gonna do that in the next few episodes, but I'm also excited because I'm trying out one for my specific mortgage in the coming months. So I'll share with you whatever I learned from that experience so that you can also reapply that once you're in step number 7. And finally, step number 8 is probably our ultimate goal, which is to continue to accumulate wealth and give more to others. In step number 8, what you've done is you've set up yourself for success by understanding your spending patterns. You've saved enough for emergencies. You paid off all debt, including the house. And you've also started to build your nest egg for your retirement account. What you will do in step 8 is really more to add on to what you've been saving for your retirement, or even for the milestones that you still have, be it a trip that you've always dreamed of or a goal that you've always wanted to achieve. In step number 8, we're also gonna discuss paano mo ba papalaguin yung perang naipon mo na over the years, and also how do you incorporate giving a bit more in your life, because that is the ultimate, for me, the ultimate measure of success if you're able to be a blessing to others as well. Those are the 8 pro steps towards financial independence. They may seem like a short list, but actually going from one phase to the other requires some level of discipline, but a lot of commitment on your end. What I wanted to share is, hindi po siya imposible, and I've seen so many people reach their financial goals by following somewhat of a semblance of these 8 steps. What these 8 steps do is it creates a roadmap that you can follow para kung nalilito na kayo kung nasaan na kayo in your financial journey, you can always refer back to the 8 steps and try to identify nasaan na nga ba ako and what are the items that I should prioritize at this stage in my life. Marami ako naririnig, especially millennials, trying to think about how do I invest, how do I play in the stock market, or how do I save up for a house, when a lot of them also don't have emergency funds, for example. Or I've also seen a lot of people who are very, very deep in investments, but also equally, they have a lot of high interest debts. The funny thing is, regardless of how good you invest, if you have these debts with you, the chances are the gains that you have from investing will easily be negated by the interest fees that you're paying on debt, or even just emotionally you're thinking about them weighs you down and prevents you from making better decisions that will help you build more wealth and reach financial independence better. I believe na pag sinundan natin yung 8 steps sequentially, we're able to prepare ourselves for the unknowns of life, and trying to understand what is our priority at a given point in time helps us make things a bit more bearable versus trying to understand everything and confusing ourselves in the process. now that you know the 8 pro steps, I want you to think of where you are right now. It doesn't matter if you're on step 1 or near step 8. The most important thing is for you to know where you are and for you to take action to take the next step forward. Comment down in the comment section below on what your step is, and together, let's make this a fun learning experience. If you found value in this video, please click on the like button so that YouTube will be able to suggest more similar videos to you. And don't forget to click on subscribe and click on the notification bell so that you're notified every time we upload new videos in the future. Once again, thank you for joining and see you in the next one.